Welcome to Real Estate Agent Superstars. I'm RJ Baxter, your host, and we have a special guest today. We have Scott Rodgers, superstar real estate agent from Denver, Colorado. He's with Bungalow Living Brokerage, and he's a native of Denver, and he's been in the business about 6 years, and he's here to share with us some of his successes and how he's gotten to where he is. So welcome to the show, Scott.
Yeah, thanks for having me.
Yeah, absolutely. So tell us a little bit more about yourself. You've only been in the business since, is it 2017?
Yeah, I got licensed the end of 2016. And so basically 2017 is when I really started doing anything. Yeah, so I mean, it's, the market was on the way up at that time, and then it went up even more, like another leg. It's like, okay.
Right.
And then it went into the post-COVID, which was like, holy cow, so a
Yeah.
lot's happened in that period of time. And we're obviously in a recalibration here ever since, I'll just call it June of 2022, into a new era. So it's been interesting throughout that time.
Yeah, absolutely. And you grew up in Colorado?
Yeah, right? I grew up in basically Southeast Denver, and went to Denver public schools, K through 12, and was bussed around at that time. That was the policy, the norm. And so I was bussed, I was in Southeast Denver, obviously, but also spent time in the Baker neighborhood and elementary school for 3 years, and then also the Cole neighborhood for 3 years in middle school, and a couple of years Southeast, and then high school back in Southeast. So saw a lot of the city there. And my mom owned a business for like 20 years on the west side of Denver, so saw that, more specifically Barnum and Ruby Hill. So from a young age, I felt pretty connected to, basically all parts of Denver, geographically and socioeconomically and whatnot.
Yeah, yeah. And you have an interesting background before real estate, right? And tell us a little bit about your journey and how you ended up picking this crazy business for your career.
Yeah, right. I'm sure there's a lot of agents that maybe it's a typical path to take a long path there, but I certainly fit that bucket. Did not come straight in. I sort of did. I bought my first house, I think, when I was 24 or 25. So I got into it early in that sense. And my dad was involved as kind of a side, hobby type thing as I was growing up. But my first real job was basically in media, online media for radio, TV, newspaper. Started in Denver radio as the webmaster, web director for some radio stations, and then went out to Milwaukee for a few years to be at the corporate level of a company, and started with TV as well and radio. Was at the center of growing up like a $4 million a year business over 3.5 years. I mean, it was just like light speed. And there was 35 radio stations and a dozen TV. So in my late 20s, I was a very entrepreneurial type, or intrapreneurial, I guess technically is the way it was, inside a company from the 1880s, I think is their origin. And then at the end of that, we bridged the digital divisions of the broadcast and the print divisions. So I got into newspaper as well with the daily newspaper in Milwaukee. And I mean, that was my world. And that's when they were going through their major digital transformation period. So change was just constant. And I was at the center of all that. Kind of got, in a way, too sucked in, and I think disconnected from the reality of other people. And I don't know, it was a fast upward trek. And so in 2009, just kind of reset everything, but came back. I was with 9 News for a little bit, going into the depth of the recession. And I think the same day the Rocky Mountain News shut down, after 150 years of being in business, I was let go from 9 News. And, it was kind of like, I was their digital sales manager at that time. It's like, why am I even coming in anymore? It's like, no one's spending money if they don't have to. So,
right. Yeah, I remember those times.
That was really like many people that go through something like that. I mean, that was kind of the beginning of where I'm at now. It opened me up to a new path and allowed me to question kind of, the path I had been in and whatnot. So, but did some fix and flip, like 2012 to 2018, on kind of on the side, rehab flips, and then got my license probably because of that, so I could list our own flips, but found out that I actually enjoy working with consumers more than doing the flips on, and so shifted my focus there to other people. But all that experience has served me well.
Yeah, yeah. So what led to your decision to become a full-fledged realtor?
Partly, I feel like I had the pieces in place to make it work, and so in the beginning, it was kind of like, well, why not? And but as I started interacting with people and getting more into it, I saw that I liked it. I saw that all sorts of little experiences throughout my life were actually relevant in a new context. I could apply them, and whether it's knowledge about neighborhoods or the trend of Denver and Denver's story, and helping people move from out of state into the Denver area and help them understand that some of the nuances, and find that that right neighborhood, that right place, the right house, whatever's right for them, kind of help connect them in, and and then I don't know. I mean, working for yourself is nice, but it can get a little bit lonely, when you're doing things for people. It feels a little better,
Yeah, yeah.
I don't know. There's a positive vibe there to it. Yeah. I mean, I tend to think in terms of I'm helping people achieve the result they're looking for. Like my brand is the peak results is something I use, and just try to whatever people want to do, I'm trying to help them get there.
Nice, nice. So did you have success right out of the gates, or did it take you a little while to figure out how to be successful in the business?
Yeah, no, I'd say I was slow. I had some success, but I was following a model and doing, following scripts and doing things, going through the motions. But what I eventually realized was I was basically operating in a way that was not kind of true to myself. I'm more analytical, I'm more like I'll think deeper and sometimes more broadly, and I'll just kind of sit with stuff a little bit longer, and I'm not as polished as a lot of agents. And if we do like a disc analysis type thing, I'm different, I don't, there's like a high D, a high I think is very typical for the typical agent. It means they're driven and they want to interact with other people, right? And those are very good qualities as an agent. And I'm actually fine being, more like away from people more often, and not as connected. And so, but I get into detail in a way that others either don't want to, or maybe they can't. I don't know. I think it's a matter of preference, but it's more natural for me. So what I discovered was I was basically showing up on phone calls with people, just not as myself, it was like me reading the script, and even if it sounded right, it wasn't like right in me. And so I think they can pick up on that, and know that people can pick up on that, when you're not being yourself. And so I kind of took a step back from that and went off on my own. I like first 18 months, I was on a good team at Keller Williams, Integrity, and Shady Creek. Learned a lot, good people. Everything was right. It wasn't the right fit at that time, for me. And moved over to EXP. I was there like 4 years, and it allowed me to kind of tailor to me more and learn more about who I am as an agent and some of the unique value that I can bring a client. Sometimes if you're different from somebody, that might feel bad, but what you also have to do is discover the other piece of that. Like, if you don't have something, what do you have? And so, allow me some time to discover those other things that I do have, and figure out how to tailor them, for other people. Yeah.
I agree with that. I mean, it's so important in this business to be genuine and authentic and be who you are. And that's going to appeal to some people and not to others. So it just is how it is. Even if you were the person that would plug into the systems and use the scripts and all that kind of stuff, that might appeal to some people as far as their personality, but for others it wouldn't. So I think that's a great epiphany that you had early on there.
Yeah, I think if I would have done more to really internalize it, I could have made, in hindsight, I could have made that work better. But anyway, that's kind of the path. That's the way it turned out. Yeah.
Absolutely. So you've, from my understanding, you've taken your sort of your analytical nature and that approach into how you look at listings for clients, look at, do your marketing packages and that kind of stuff. Tell us a little bit more about that.
Yeah. So like if I'm working with a seller, for example, somebody selling a house in Denver, um, I don't really take a canned approach. I just try to get to know them, what they're interested in doing. So on one end, it's what's the end goal here? What do they think they want to do? And I may ask questions to help sort of test that a little bit to see how strong that conviction is, and if they haven't, if they've thought about some other things. But I mean, when I'm interacting with anybody, that's kind of what I do, just to see how solid it is, just to help other people discover what's maybe the best for them. Not like I'm trying to quiz anybody or anything like that,
Right.
but just trying to help them find the best path for themselves. And I anchor into that piece, it's like, where are we going? Okay. I anchor into that. And then in conversations, interactions, and observations, I pick up on a lot of little pieces, and then I start to assemble those in my head, and then put together a strategy that works. And I like giving people options, so, like when you're selling a house, do you want the most money, or do you want to sell the most conveniently, or the fastest, or what's your priority here? Most people often say the most money, and it's like, okay, cool. All right, well, then we calibrate around that. Or if they don't, then it's like, okay, well, here are some options. And give the disclaimer, that fast and convenient is not going to yield the highest amount of money. So
right. You can't have all three of those things at the same time.
Yeah. I mean, what's the old business thing? Like fast, quality, and cheap price, I think. And it's like, pick two. You can't pick all three, right? So you can have something maybe fast and high quality that costs a fortune. You can have something that's cheap, low quality, maybe, and fast, or anyway.
Yeah, right. Yeah. I've heard that before. In other businesses and in real estate.
Yeah. It's more of a general business,
Yeah. So you don't have a canned presentation. Do you have a certain series of questions you ask people? How do you dive into the, to really get to the root of what they're looking for?
Yeah, absolutely. So, I mean, I just, from the very beginning, it's a conversation. And then I do have a little bit of a presentation I go through to help them just ramp up into who I am, and how to think, like where the current market's at, and things like that. That's the foundation piece. But then it really gets into who are they, what do they want to do, and the specifics around the property. And I try to think ahead, and do I see anything that might be an issue at some point before we close? And I try to bubble that up ahead of time, early on, so that we can have a conversation about it. I think I learned the hard way early on that doing that also makes you as an agent less marketable than the other guy who's coming in, smooth and fresh and everything, and is just glossing with everything. And then people learn all those hard facts after they sign on with an agent.
Right.
And so I'm much more willing to bring that stuff forward and just be real about everything. And I tell them, if you ever don't like something I'm doing, or if you have questions, like speak your thoughts, don't hold it back. It's not about making me feel good. We're on a journey here, and we're going to get you to your destination. And that's what it's all about. So, I work for you, your client, and we'll ebb and flow accordingly. But so I know I've lost some deals because of that. Talk about things.
I bet on the flip side, though, you've won some deals that way too.
Oh, well, probably. And I have a very good ratio. I don't know what it is exactly, but very good ratio of, once I'm in a deal, whether it's I have a client, or whether my client has accepted or made an offer and they're under contract, because of that, they close. Like it goes all the way through, and it's more effortless all the way through. So
yeah, that makes sense.
That's kind of the justification in my mind is, I think just in terms of treating people fairly, I think it's right to bring some stuff up, and it so they can actually think about it and have some say into it. It's not just about a commission, it's not just, just about
Absolutely.
closing. It's about the whole piece, the whole process.
Yeah, yeah. And I think a lot of people or most people appreciate that authenticity. And then there's not those curveballs through the transaction where they could potentially get unhappy with you and go somewhere else.
Yeah, I try to minimize all those curveballs as much as I can, to say, like, here's a hypothetical, this could happen if we do this, this could happen. And so they at least have some basis to be thinking about those things.
Yeah, yeah. So tell me a little bit more about what you've done to bring in so much business. I think you told me that you have been working with some institutional investors.
Yeah. Last year got interesting. I I got in conversation with a company that basically property management company that is very much a technology company,
Mhm.
and it's like the merger of the two. And they have capital partners, large investors, like private equity or a fund or something like that. This is more than just a few houses. This is like dozens of houses
Mhm.
in terms of scale, and likely multiple cities, multiple markets around the country. And so I signed on with them and essentially worked for one of their clients. And we bought up dozens of houses last year. I think all but two were in Denver, a couple in Lakewood. But so I got to know the Denver market incredibly well during, I think, the most competitive market we've ever had.
Yeah.
Like in May of 2022, I think we had 22 closings.
Wow.
It was just bonkers, right? I mean, that's like what? So
Jeez. Yeah.
that's like, yeah, a year or multiple years for most people. Now,
Yeah.
of course, just got to preface it, the whole commission's not coming to me, right? It was
Right.
so
Right.
it's not a typical deal. So otherwise, I didn't make
Yeah.
over 1.5 million,
Right. Yeah.
but
And
I did fine. But having that kind of experience is kind of usable forever in some way.
yeah, yeah. Just doing a lot of transactions has to be valuable.
Yeah, I think we closed. I think it was like 56 or so with them, and last
Wow.
year,
Yeah.
and so I was. I mean, so I was on the buy side at that time, and through all that, and I mean, I was testing all sorts of things like how I approach listing agents, and also working on my side and how to. I was very committed to keeping a deal together once it's under contract, and I mean, it's just painful when you have to terminate. And you do what your client tells you to do, really, in that respect. But
Mhm.
there's things that I can do to mitigate the risk for everybody, and so I feel like I really honed that piece. We were, well, I don't want to get into too much specific information, but like I don't know, I had a big impact, I know, on being able to do high volume and not have many terminations at all. So
Yeah. Yeah.
that felt good, because I know for the sellers,
Sure.
it's a huge deal for them if you terminate. And I echo that frequently on the buy side internally with our conversations, but we
Yeah.
find
Yeah.
pretty well. But there, I was able to be much more analytical and more kind of business to business, straightforward, and that presentation aspect that you kind of fall into, when working with consumers in more of a retail situation, retail market. I enjoyed, just kind of getting straight to the point and building some efficiencies around that, and helping them understand the city and the nuances of all sorts of things that sometimes were learned later on. I try to, again, bring all that forward as much as we could to help mitigate risk, and
Mhm.
if we offer on something, it's something we want to stay with and see it all the way through. And but
Yeah.
yeah,
Yeah.
yeah.
That's interesting. So how did you make that connection, or how did you find them?
Um, I think it started online, and they were kind of looking for some people, and I was looking. It was at a time I was looking to make a change and was trying to figure out, which way do I want to go, and we connected that way. And then the market, I thought I was in a good spot, considering the market slowdown of last year, and then it actually slowed down for me too, and they basically stopped buying for a period of time. And so we kind of parted ways for about a month or so, a couple months, and I just came back. So now I'm the managing broker for them in Colorado. And right now it's just me. It's not like we're building up a huge team of agents, but so I'm back on with the brokerage and I'm getting prepped, ready to go, processes and whatnot, in case they have a buyer that wants to go out and buy multiple properties, most likely. It's usually not one or two. It's
so they represent individual people that want to buy multiple properties. Is that what you mean, or the institutions buying the properties?
Well, both. I mean, they have represented individual, like somebody who wants to be a landlord but doesn't want to, or an investor, but doesn't want to have to be the property management, side of it. That's what they've done in the past, is service a property manager and then help them buy it. But then that morphed into this working with capital partners, where it's generally speaking a lot of money and dozens of multiple deals and probably multiple cities. So I know there's a lot of opinions about that. I mean, I feel like having a long, deep connection to Denver, if anything, I can be an advocate for that. And I have been an advocate, I think for people in Denver and neighborhoods and whatnot, and trying to raise the quality of that. And it's not all numbers. It's like real people, that you're affecting. And that's part of what my voice has been. But markets evolve, and the reality is there's some big money. I mean, this happened back leading into 2008, where buying up mortgage-backed securities was a big thing. Why? Because people don't move that often, right? So if the average person, let's just say, moves every 8 years, and if the average person has a mortgage, then they're making that payment every single month for, let's say, those 8 years, right? If you're an investor, that's a very attractive thing. It's not like the stock market that goes up and down. You're going to, on average, I mean, the bulk of it, you're going to have a payment. And if you assume, build into your models a certain amount of delinquency and defaults and all that, that's where things went haywire in 2008, was those models were way off. And the rating agencies, I mean, we can go into that, a great deal, but let's just call that a rabbit hole for now, but anyway, so there's a lot of investors, and I mean, this could be people with 401ks, this could be teachers who are part of like maybe like a California teachers union or somebody like that, who's investing with large funds, and whatnot. And so it's like retirement, money. Everything comes back at some point, nothing's on its own. Everything connects with everything at some point. So anyway,
so what are your thoughts on where the market's going? It's January 2023 when we're recording this. What do you think is in store for us this year?
I think we're going to see slowness. Slow isn't up or down. It's just slow versus fast. And so last year was fast and intense. And I use the phrase combat by contract at times to describe the market, because I mean, it was just grueling, and that's just not good for anybody. People need time to think this stuff through, so the speed isn't good. I don't know, maybe people are using cash when maybe it's not the best thing for them, or not, I don't know. But it's also, if you have a house and you want to sell it and move, whatever, a few miles away or somewhere in the metro and not out of state or somewhere, then kind of how you sell and buy, you're in the same boat, the same ocean, the same lake, whatever. And, what you gain on one side, you're then going to face on the other side of the equation. And it's been hard for folks like that because of the intensity. And so I think the intensity, I think we're going to see unwinding of that intensity. Hopefully that'll be appreciated by everybody. And we'll get back to, in a way, quality. I think people having less buyer's remorse, less, if a deal falls out for a seller, less disruption for their world, more ability to go buy a house with your own, contingency in the offer, and not be sort of a second rate, offer compared to
Yeah.
cash offers or something. Have more ability to get the house you want with that type of an offer.
Mhm.
And I wouldn't be surprised if we see a decline. With slowness, you tend to see a decline, but the fundamentals in Denver are good. In Colorado, they're good. They're very
Mhm.
good. And the story that has attracted people here for decades, that attracted my parents here in the 70s, and it kept me here. And I've traveled the world and been all sorts of, I could have ended up in, all sorts of places. And so I feel like I re-chose Denver many times throughout my life.
Yeah.
But that's not going anywhere. And I think the trend of people leaving probably the New York Cities and the San Franciscos and LA's, Chicago's or someplace, that's probably going to continue. The more our world becomes virtual and whatnot. And so Denver, compared to
Mhm.
those markets, looks good. Now within Denver, people will leave the center core and move out as well. So there's kind of this flow. Just depends on where people are at and where they go.
Yeah.
One thing I'm watching is the rate of people moving in versus out, because more people moving in than moving out is something that's driven our market. We've had a
Mhm.
lack of supply because that demand has been high from people moving in. So if we
Mhm.
see net migration basically flow outward instead of inward, that would ease up the market, relax it, probably bring some prices down a bit. But I feel like this is all from a long term, and you have to think long term with real estate. It's all just any bumps are temporary. It's a scarce asset. It's rooted in scarcity, and those fundamentals you can't go against.
Yeah.
The Fed, we could print more money and all this stuff, but I think until the population growth stops, and population growth stops, and if people stop buying second homes and stopped having like split families or
Mhm.
divorce or whatnot, and if we started balancing the budget and not running up debt or anything, and infusing sense credit in the market, or money supply into the market, all those things would have to happen, I think, for the real estate, the long-term trends of real estate to turn, and none of that's going to happen.
Yeah. Yeah.
um,
I agree.
some things will fluctuate, but
Yeah.
the pain to accomplish that is just massive. So it won't
Totally.
happen.
Totally. And will the government allow us to endure that? Is the
Yeah,
question.
well, all the politicians would be voted out, and there'd be massive change.
Yeah.
And so they'd be voted out because of the change and the pain of that change. And so
Absolutely.
it's kind of I think the reality we're in. There's some moral hazard there from a
Yeah.
basis
Yeah.
about them back in 2008 when they were bailing everybody out.
Yeah.
Bailing out capitalists, right? No, anyway.
Well, one thing's for sure, it could get interesting this year.
I expect to be surprised. I'm not sure in what way. It
Yeah.
could become much more positive, or hopefully not, a lot more negative. We'll see. But
Yeah. Yeah.
I don't know that we'll see interest rates above 7, mortgage rates above 7 though. Much
I don't
above.
think so.
I think we kind of saw the high water mark. The question now, I think, is more your area, but duration of the rate, and specifically where it's at. But I think the shock wave was last year, going from one extreme to the other. And
Yes.
this year, I think, will be everything in between, somewhere in there. Now,
Yeah.
what happens with pricing, I don't know. There's a case to be said in the action. What happens with the real economy and jobs and employment? Once employment and wages and people's ability to pay, once that is affected, then
Yeah.
potentially,
Then all bets are off
yeah,
at that point.
right,
Yeah.
yeah. So that's
Absolutely.
something to watch, and the Fed's trying to curtail that right now. So we'll see. Soft landing, hard landing. I don't know where we'll end up, but
Yeah.
I think as an agent, we'll have more ability to have time with our clients, not feel
Mhm.
rushed, and not have to think about as much as like, okay, how do we do this in such a way that they don't feel major buyer's remorse on one end, but also they just lose out on everything on the other end. There was a finesse
Yeah.
there where trying to find that middle ground. And I think everybody was outside their comfort zone last year. I don't care where you were in it. It was not normal.
Yeah.
It
Yeah.
was not sustainable, or it was just everywhere across the map. But
Yeah. Yeah. Cool. Well, there's one more thing I wanted to ask you about before we wrap up, and that's you have this unique thing you do at closings. You call it kilted closings, and you wear a kilt to the closing. So tell me about that.
Yeah, so I say every home deserves a kilted closing, right? It's kind of a tipping of the hat to respect for a client and what they're wanting to achieve. It's also fun, and it illustrates part of my heritage. So I've got a Scottish heritage, and I've been to Scotland a few times. My wife and I were married there, and my dad plays the bagpipes. I started to, and it's not a friendly thing to play. It's like you either don't do it or you're reasonably good at it, and there's in the middle
So
ground is
you don't pull out the bagpipes at closings?
No, yeah, because that would be agony. But usually it's kind of, how often do people buy or sell a house, right? It's not very often.
Yeah.
And it's becoming more often, but some people will go 2 decades or more and not have a real estate transaction. And so, it helps me kind of anchor into that idea that, hey, this is pretty special for my client, and kind of keeps me grounded in that sense. And then it's just festive. It's fun at the closing table, and it's always a conversation piece. And I had, sometimes if a deal is tough or something, I know I had a deal one time where I was concerned that personalities might kill the deal. We may not see it all the way through closing. It wasn't because of anything contractual or financial. It was just kind of the way just unique things on both sides. And I discovered kind of early on that wearing a kilt actually lifts everybody up in their spirits and keeps them focused a little bit better on what they've already agreed to do. And I think in that situation, it kind of curtailed, I think, maybe some potential surprises, and kept everyone kind of focused on what's important, and not going down a rabbit hole or something, Anyway, so that was kind of early on after I started doing it, and I'm like, okay, this actually has some real value to it. So
yeah,
I've kept doing it. I've had times where I forget my jacket, I'm like, oh, geez, or
yeah. Is your wife Scottish too?
No.
Okay.
She's more on the Norwegian side. That's the other side for me. It would be Norwegian too, and I think she has some German too. But anyway, yeah.
Okay. Well, that's really cool. I think anything you can do that makes you unique and different from other agents is valuable. Yeah. So that's really neat.
Yeah.
Cool.
Yeah.
Well,
it's fun. It feels authentic, uniquely authentic to me. So.
Yeah, that's cool. Well, I think there's a million things more we could talk about, but it's time to wrap it up. So thank you so much for being on, Scott. We definitely appreciate you sharing your wisdom and knowledge and insights. And once again, my name is RJ Baxter. I'm with Intercap Lending. And if you found value in this show, please share it to a friend, to a coworker. If you think they could also get value from this, that helps to spread the word about the show. And I wanted to remind you that something I do as a lender is I believe in giving back to the agents that I work with. So if you'd like to talk about that, just reach out to me. I'd be happy to have a conversation with you about that. And thanks again, Scott.
Yeah, thanks for reaching out, RJ. I appreciate, the chance to be here with you.
Absolutely. Okay, everybody, have a great day. And thanks again for listening.
All right. Take care.